Let's continue the discussion with our markets panel now, as one of our next guests took advantage of last week's sell-off to reposition his portfolios, trimming some semis, buying into memory. One of those buys is SanDisk, up 10% today. Joining us now is Tom Hulick, the CEO of Strategy Asset Managers. Here on set with us as well is Ausun Kwong, the chief equity strategist at Wells Fargo. So, Tom, is this your SanDisk move we're talking about?
Well, I think so. I mean, you've got to remain bullish on three reasons. I mean, earnings continue to surprise on the upside. AI spending continues to be extraordinarily strong, and the demand is real. It's not speculative out there.
And that tells you then when you see, you wake up and you see the semi trade up 5.5% today, like our last guest was saying, yeah, it's almost the market's trying to figure out what is going to happen in earnings season. And one day they're panicked and the next day they're relieved. Does that land with you?
It does. Kelly, many of the investors that we talk to kind of assume that the chip stocks are really expensive. When we just rebalanced our market-oriented portfolio as an active manager, the majority of the stocks were overweight in the semiconductor positions. But the reality is really different. I mean, these PEs are actually forward-looking, quite attractive right now. Currently, they're not. But if you look at things like NVIDIA, 13 to 21 times earnings, SanDisk 24 times earnings, AMD a little bit higher, but the valuations look a lot more reasonable right now with forward earnings. So price isn't the story, it's the valuation relative to the earnings growth right now.
Ausun, and you know that I like these sort of big historical data points. I just find them interesting launching points, and you note one here. July is tracking to be one of the biggest momentum reversal months in history. Mm-hmm. What does that mean? What are we reversing into and out of?
Yeah, so if you look at stocks correlation between the first half performance versus July month-to-date performance, it was negative 55%.
So, okay, so first half of the year, Jan 1, June 30th, versus July, completely inverted.
Yeah, exactly. So whoever outperformed in the first half of the year underperformed so far in July. And whoever underperformed in the first half of the year is outperforming in July. So this is basically a momentum reversal.
Like so what happened? It was just the calendar turn, or maybe it was the calendar turn.
Yeah, maybe there's a little bit of that, but I also think there was a positioning extreme in one side of the market, which is basically AI and the momentum trade. And I see this as essentially a factor unwind that we are seeing, momentum factor unwind because of positioning. And there was a little bit of overhang given the Chinese open source model. And now that it happened, and we know what the bottom line is, that it's actually positive for compute. So I think positioning has reset. I think there is a bull case heading into the earnings season, and I think hyperscaler CapEx, the trend is going higher. So I think this earnings season will be another catalyst that the CapEx cycle is still very healthy.
I mean, if you're right, if Google and all the rest of them come out and they actually raise their spending projections, then yeah, those people buying the semis right now are going to feel pretty good about that.
Mm-hmm. So our analysts actually raised their 2027 CapEx estimates to $1.1 trillion from just the big four companies. And that's this year is about 800 billion.
Wow, okay.
So that's actually about 25% above where consensus is.
Huh.
So if that actually comes to fruition, then I think we're talking about a huge upside for semis overall.
Well, Tom, to Kelly's point, you're one of those people, it sounds like, that took advantage of that rotation to your and your clients' benefit.
As the hyperscalers continue to invest, you've got to follow the smart money. And this is also from a government investment point to the hyperscalers. So as their spending continues, the forward-looking, potential for the memory sector in particular is going to be quite strong because memory is becoming one of the most attractive areas in the technology stack right now. And if you've got a simple explanation, you've got the GPU as the brain, that's NVIDIA. You've got high bandwidth memory, that's working memory. If you don't have a GPU performing without memory, you don't have really anything. So this whole stack that's happening, such as like a Micron, one of the global leaders in the high bandwidth memory area, the AI spending supports long-term earnings growth for this company, and they're becoming a core AI infrastructure company right now. So it's really important to kind of follow the smart money and understand that the hyperscalers are not slowing down right now with their investment.
Oh, so? I'm just curious what you would. I mean, also, we heard people saying everyone's trying to diagnose why July was so bad. Was it a fundamental change with Chinese competition coming to the market? Was it a positioning change because all of a sudden people and hedge funds are selling big tech and things like that? Was it the Iran war? Like Brian said, we're kind of looking past that, even though it's still very much happening. But the oil price is somewhat steady, and so people don't feel like big tech is the only place they can be. They can be in the rest of the market. Mm-hmm. What do you make of the catalyst, and what does that mean for kind of once we hear from the big players and earnings, then we have to kind of look to the next thing?
Yeah, so first on oil prices, I think higher oil prices are actually a tailwind for big tech because you can't really own anything but AI. I mean, that's been the case back in April and May, and that's when all these AI stocks massively outperform the rest of the market. And number two, I think heading into the hyperscaler EPS, I think the monetization side is equally important as CapEx guidance, if not more important. So if they come out and raise their CapEx guidance, but don't really show much monetization, I actually think that's bearish for the Nasdaq overall because there's going to be a fear around overinvesting. Mm-hmm. So I think monetization is a bigger focus this earnings season, despite everything.
What would that look to be? Just kind of earnings per share, revenue? I mean, is it guidance?
Yeah, I think it's all of the above. But revenue acceleration is going to be a key measure.
Yeah, Tom, have you been happy so far with the earnings that you've seen? More to come. We know that. But the numbers that we have seen and the guidance that we have seen, does that play into your thesis?
We have. I mean, we continue to be surprised. I think the general public continues to be surprised on the upside. What you really have to focus on is what this looks like multiple quarters out. So active managers like our firm will try to look forward and where the momentum is here, since we're talking about momentum stocks. But we're not surprised at all. I mean, this is going to be one of the greatest the greatest bull markets that I think that we'll experience. And it's just because of the technological evolution that we're seeing with AI, memory expansion, the speed of chips, how things are connecting together. It's a very, very positive time to be in this current technology business cycle.
Then there's always risk every day, every year, forever. What's the risk, Tom, right now?
Well, we don't see a lot of risks. We've got a positive business administration, with current administration. Earnings are very strong. The risks, you could see some geopolitical activity happening. You obviously can see a slowdown in consumer spending. You could see a hint of slowdown in CapEx spending. But for right now, in participating for the second half of the year, I think it's all systems go. You want to have that diversified portfolio, but you definitely want to own some of these names in the memory sector, the chip sector.
All right. Gentlemen, thanks. And you, so you agree that you can stay long, own it, own the chips, own the trade?
Yeah, we're bullish.
All right.
Yeah.
Gentlemen, thanks. Tom Hulick, Ausun, Kwong, really appreciate it.